Today's financial advice is sponsored by Endeavor Private Wealth. Well, Chris McGee, managing partner at Endeavor Private Wealth, is joining us for our weekly segment on investing. Chris, good morning.
Good morning, Dane.
So today, I want to talk about a friend of mine. Taking a job and with a new employer, and she's been a very disciplined investor in the company's sponsored 401k plan. And now she's wondering what are her options with respect to maintaining her retirement account under her former employer's plan, moving her account to the plan offered by her new employer, or rolling her account into an IRA.
Excellent question. So first, it's important to know whether the former employer plan allows your friend to maintain her account in that plan. If it does, this may buy her some time to consider her options. She may also like the options and investment choices that she currently has and other features, such as the investment tools and financial educational resources that may not be available in her new 401k or an IRA. She will also want to consider the investment fees and expenses in the former plan and compare them to the costs associated in her new plan. If she owns company stock in her plan, she will need to consider some very complicated and technical tax and planning issues that may apply.
What are some reasons it may be advantageous to move to a new employer's plan then?
The new plan may have more attractive investment offerings, fees could be lower, and its features more attractive. It also may be less complicated to manage one retirement plan savings if it's all under one roof as opposed to multiple plans.
And instead of transferring her retirement savings to a new plan, can she roll over her 401k into an IRA?
Yes, she can roll over her retirement savings into an individual retirement account or RIA. She may gain access to investment choices that would not be available in her former employer's plan or the new employer's plan. It is also possible to consolidate several different retirement accounts into a single IRA to simplify management. The IRA, like the 401k plan, is a tax-deferred investment vehicle. Therefore, earnings can grow tax-free until withdrawn. This means that instead of paying taxes on the returns as they grow, the owner will only pay taxes at a later date or upon distribution. But again, investment choices, fees, and the additional services should be compared. The IRA options also preclude the ability to borrow against the retirement savings, which may be an option in her new 401k if the loan provisions apply.
And what if she rolls over her 401k into a Roth IRA? How does that all work?
That's also an option. But assets rolled into a Roth IRA will be subject to taxes in the taxable year in which the rollover takes place. And then tax-free withdrawals from the earnings of the Roth are permitted 5 years after the first contribution that created the account. Once the 5-year requirement is met, earnings, if taken, will be free from federal taxes after the age of 59 and a half upon disability or death, or to pay up to $10,000 of expenses to purchase the first-time home. Withdrawals that do not meet these qualifications will be subject to ordinary income tax and pay a 10% federal tax penalty on.
So to paraphrase Hamlet a little bit, to roll over or not to roll over? I think that is the question. Is this a question that financial advisors can help people address?
Dane, I didn't know you were such a Shakespearean. They certainly can help. However, financial advisors who give advice to clients about whether to roll over 401k assets to an IRA are subject to a special set of requirements if they receive compensation either in the form of advisory fee or commission as to the result of recommending the rollover. These special requirements include acknowledging that they are serving as an investment fiduciary. Their advice must be prudent, compensation must be reasonable, and there may be no misleading statements. Clients should be provided written disclosures explaining the scope and the relationship and any material conflicts of interest and why they are recommending the rollover of the assets is in their best interest.
And Chris, quickly before we have to go, any final thoughts on all this?
When we think of rollovers, there are some really cute ones, but there are other types of rollovers that may be quite challenging, especially from a 401k to an IRA, requiring thoughtful analysis and evaluation of each individual's unique situations is always needed.
Well, Chris, thank you so much for joining us today. We always appreciate your time.
Thank you.
And of course, to learn more about Endeavor Private Wealth, visit EndeavorPW.com.